Hello and welcome to CMC Markets Weekly Trading Outlook for the week of February the 9th, 2015. My name is Colin Szynski, Chief Market Strategist. We're coming off a very active week for world markets, and even though news flow is a little bit lighter this week, it's still looking like it'll be an active one for trading. Our theme this week is Greece, gold, and oil in focus. And those three markets in particular, I expect we will see to be significantly active. There's a couple of forces really playing out in world markets as we head out into the new week. The first is the U.S. economy and the U.S. effect. And that means primarily that they're coming off the incredibly strong U.S. non-farm payrolls that saw the payrolls beat the street, and previous months' big upward revision shows very, very strong U.S. economy. So what have we seen? We've had a big rally for the U.S. dollar today on Friday the 6th, and basically we're seeing that roll over everything. We've got the euro down 1%, gold down $30 for about 2%, and so on. We are getting a rally in crude oil as well. It looks like it may continue to be active into next week as well. The news flow for the new week is fairly light. There's not as much economic news. The week begins with economic indicators for China. We don't get as many indicators for China in February because of the Lunar New Year holiday. Some of them don't report again until March, but we do get trade and we also get inflation. So those could be active that Sunday and Monday. And then later in the week, the focus shifts over to Europe, particularly on Friday, where we get GDP numbers for a number of countries. Because it's fairly light for economic news, we're likely to see, first of all, some of the trends from the previous week continue. So looking at the U.S., but also in particular the Eurozone and what may happen with Greece. There's been a lot of posturing, a lot of people setting out positions as they try to enter what could be potentially very difficult negotiations that could be very bumpy and could drag on. So far, the market response to this has been fairly muted. The Greek treasury yields have remained below 10%, and gold has actually been falling even in euro terms. So far, people aren't really panicking, but this is a delicate situation and things could change rapidly. So we do have to be keeping an eye on that. That could drive quite a bit of volatility in the markets as we move through the week. It's also still a busy week for earnings reports in U.S. and Canada. We have a number in Canada. We have a number of resource companies reporting throughout the week. A number of the big miners and big energy companies. In the U.S., we start moving from the top tier down to the middle tier of companies. Really, in the States, the big day for earnings is Wednesday. After the close, we get reports from Tesla Motors as well as Cisco Systems. So that's a big day there. We also get earnings report this week from a number of insurance companies in both Canada and the United States also reporting. And finally, we also on Thursday we get results from Bombardier, which could be usually often kicks off quite a bit of activity in that stock. And also Precision Drilling could be of interest on the drilling side, showing the impact of the slowdown in exploration spending from the oil price crash. So moving on now to world markets, I'll just start off a bit with stocks, and then we'll move into gold and oil and currencies. Just wanted to highlight here today that here on Friday the 6th, even though the U.S. came out with fantastic news, the response has not been all that spectacular. I think there's a feeling there now that this keeps the Fed on track towards some kind of interest rate increase this year. So although it's okay, it's not a huge reaction. We're seeing here that basically the U.S. markets are trending sideways between about 17,150, 17,200, and say about 18,100. And even here, this is resistance about 17,950, similar to its previous high, and it just can't seem to get through. We are getting some mixed signals on the US 30 though. We can see the RSI has broken out of a downtrend and it is starting to show an upward uptick in momentum, but we're not really seeing that play out too much in the index. If we do see it start to creep up above 18,000 though, take a run at this high and then we'll see if it's able to get through. But so far, it seems to me as though we're pretty much still in a sideways trading band, even though we do have a bit of an upswing here. We could see markets remain choppy for quite some time. In terms of client sentiment, we're seeing here that it's been mixed. Again, we have interesting. If we look over here on the position value. Clients overall are net short, but what's interesting is top clients have been going short today, so significantly shorting into this rally, whereas all clients have actually been has dropped off. So we're seeing that some of the more clients that have been more profitable over the last few months are actually shorting into this rally, while others have been not doing that and probably like staying on long positions. So it's this is quite an interesting divergence here among clients, and we'll see how this plays out over the next few days. Overall, what we're seeing with these sideways markets is a lot of indecision among traders about which way to take things from here. We've seen that in increased intraday and between days volatility. Certainly, we've seen that a lot in the oil and gas market, but also fairly sizable swings in other markets as well. If we look at the Germany 30, which could be influenced by events in Europe over the course of this week, we can see clients are pretty much 50-50 on this one. It's just ticked up here. We do, however, have seen on Friday here a fairly sizable increase in long positions. This is probably people covering shorts, where we've gone from a net short position to a net long position on the Germany 30, and that's kind of fairly marginal at this point in time. In fact, now if we bring up the actual index, we can see that it's actually getting knocked back down. So again, there is some divergence between traders as to what to do. It had a pretty strong run here from 92.25 up to 11,000. It's quietly been backing off here. The RSI has quietly been backing off here as well. As I showed on the client sentiment, all clients are still actually net short on this, whereas top clients have just gone net long slightly. So there is a lot of indecision about where the index could go from here. So it is possible, though, if we started to see some of the risks increase in Europe, or feeling that maybe things may not go as planned, we could see some potential weakness in the European indices. And also, they could be active later in the week as we head into the GDP reports that all come out on Friday. Greece in particular is reporting unemployment on Thursday, GDP on Friday. Those numbers could be fairly significant because the new government may use that, particularly if they come in badly, as an example of how the austerity policies that were forced upon them haven't been working, and in fact have driven the country into depression. Moving now onward to gold and oil, we're coming off very active weeks for gold and oil, and we could see that happen again. We're just to start with client sentiment here. We are seeing, even with gold coming down, it looks as though people aren't totally buying this, believing this sell-off here, or seeing it as mainly U.S. dollar driven, because we're actually seeing a big increase in long positions in gold today. So that suggests people have been going long into this decline and expecting to see some support come in along the way. Meanwhile, we actually have crude oil up moderately today, and again we're seeing a mixed here. All clients up 5% into long positions, but top clients have been very bullish. 18% increase in long positions today. So it does look as though people are thinking that this oil price rebound may have some legs in the short term. Although really, I suspect we're kind of moving into a trading range, say between about 45 and about 60, depending for WTI or Brent, but that we're probably we're looking at a period where we could go sideways for quite some time. I took a look at the drill rigs for the U.S. recently. They were about 1,500. Back in 2008, it had gone from about 2,000 to under 1,000. More recently, it's gone from 2,000 to 1,500. So there could still be some room for weakness in that area. So keep an eye out for that as we move into the new week. But certainly, there's a lot of indecision as to, is it bottomed? Is this the final bottom? Could crude oil go low? Is it gone low enough for now? Could it bounce back? And my feeling is that we're probably going to go into a sideways trading range for the next while, but at a substantially lower level than where it was trading a few months ago. So let's just bring up the crude oil chart, and I'll show what I mean here. So we've had a bit of a double bottom in here in around $44. We had gotten extremely sold on the RSI. We're starting to lift in a nice trading bounce here, but it's running into resistance here at this downtrend resistance line in and around 52.60 to 52.80 kind of area. Really, you'd want to see it get up through this line and through 53 to really signal any kind of a meaningful upturn. If it does, next resistance, this is about 53.80. This previous peak here is about 54. $45 even. So that could be a 45 to 55 kind of trading range. A 23% retracement of the decline would not be unusual. It's fairly common, and that could bring it up back towards 58.65. Something else significant here: RSI is showing an upturn. It came back, tested 50, and moved up again. Is confirming an upward turn in momentum, at least in the near term, for WTI. And while I'm at it, I'll also bring up Brent to show what's going on here. Similarly, Brent is testing a downtrend resistance line. In this case, it's about 58.50. If it breaks through that, there's a $60 round number, and then the 23% retracement for Brent is in at about 62. Again, here we're seeing quite good strong upward growth in momentum for Brent crude. Support has moved up towards 56.40 from $54. So we're seeing a little nice upturn here. We need a little bit more work to get some confirmation of an upswing here. Gold, the battle this week is really going to be between the United States and Europe, and which is more significant in terms of gold pricing. This week here, certainly on Friday the 6th, seeing a pretty major breakdown. So we had a symmetrical consolidation triangle. Recent high in January about 1310 had dropped under. More recently, as I said, a symmetrical triangle continuation pattern, and now it's broken to the downside, confirmed by RSI falling under 50 to signal a downturn in momentum. Plus, previous breakout point about 1238 also has failed, again signaling that we're into a bit of a downturn. You could find some support in and around this support trend line here in at about 1212, and this level here is about 1220. So there is room for a bit of support, but gold could potentially fall a little bit in the short term. So what we've got going on with gold is the strength of the U.S. economy has kept the pressure on the Fed to raise interest rates, boosting the U.S. dollar and knocking gold down. The ECB QE program over the long term has the potential to be very positive for gold, because gold over the last several years has followed the ECB's balance sheet up and down. So as that balance sheet starts to increase, could be bullish for gold, but it's getting between here and there. The ECB quantitative easing program doesn't start till March, so you're in this few week lull here. On top of that, though, you also have the political risk. If things, so far gold is telling you that people aren't really worried about Greece. If that changes and Greece becomes a concern, or a Brexit becomes a concern, or a more real possibility, you could see a pop in the gold price. It's one that has a potential to be active over the course of the next week. I'll look now at a few currencies, and two I wanted to highlight in particular are sterling and US dollar CAD. Sterling had actually broken out this the week on the 5th, and then had gotten knocked back on the 6th when the U.S. dollar kind of steamrolled over everything. But the pound's been acting fairly well recently against a number of currencies. The UK did not cut interest rates like when everybody else did. That actually leaves them in a more hawkish position than a lot of other central banks, even if they do nothing. So what are we seeing here? In terms of number of clients, we've got a marginal net long. However, in terms of the position value, we've still got it pretty heavily net short on the on cable. So something important to watch here. People aren't really sure quite which way to go. In terms of conviction, we would say at this point people are still bearish, but if it continues to rebound, then it also means that this trade is pretty crowded and people may have to cover off at some point. When we look at the dollar CAD, it's also looking like it's gotten up to somewhat of an extreme and could be ready to start pulling back to see a bit of a rebound for the loonie. At this point in time, we've still got clients net short, top clients 70% on position value, and all clients 55%. But look, this has come down about 10 points here on the Friday with the Canadian dollar, which had everything thrown at it in the morning and held below 125, and that's suggesting indicative that there could be a top here for dollar CAD, or a bottom where we could, for the loonie itself, where we could see the loonie start to bounce back a little bit. So and this suggests here we are seeing that some of the people that had been long in the loonie looks like they're starting to take some profits off the table. So I'll show these two charts now. We'll begin with cable, which is right here. Sterling US dollar. So we've seen here it's been in a downtrend for quite some time, bottoming out between about 149, 150, say, and 152.75. It peaked above that level on Thursday, dipped back below it a little bit here on Friday. But look at this overall. We're seeing here we had a nice upturn in the RSI. It's broken out over 50. It's still above 50, signaling an upturn in momentum appears to be underway. If we do see sterling continue to creep higher, 154, really 155 would be the next key level. It's a round number, also a 23% retracement of the previous downtrend. As I've said, that's a common retracement, so we could see a drift up towards that in the coming days and weeks. We'll move now to dollar CAD, which I will show here is starting to roll over in a pretty meaningful way. Had a big upswing, got parabolic here through December and January. Peaked just near 128. Now we're starting to see lower highs. Here was where lower highs around 126. And today, when the U.S. dollar was rallying and Canadian full-time jobs fell, and the bears threw everything that they could at the loonie, and they could not get back above 125, that suggests that this uptrend now is probably overextended and we're into a correction phase. And look at this, we had gotten hugely overbought, and now we're seeing it back under 70. Support 70 broken, becomes resistance, and now that low is taken out. So we're speaking, we're seeing a downturn in momentum, upward pressure on the loonie, on the dollar CAD fading, and that suggests we could see it drop back here. We're got support here at 123% retracement, around 124.35. Looking at a longer term one, it's around 122.90, and another Fibonacci level here in and around 121.95. So the loonie does have some room to pull back in a near-term correction. Just to wrap up, I did want to take a quick look at Asia Pacific markets. As I said, we do start off the week with some big news for China data, so which could have some impact there. So let's start with the Hong Kong 43. Here we can see it's basically been going sideways in a pretty wide channel for most of the last year. Down here, bottom about 22,500. This is about 25,400 up at the top. We had been trading between 22,500 and 24,300 for the most of the last few months. It's broken out, and guess what? This 24,300 old resistance has now become support. We're in an uptrend. This is showing we're in an uptrend, although momentum's weakening a little bit here. We do face some resistance around 25, then around 25,400. This 24,300 could be retested in the short term as well, depending on what happens with the China news that comes out to start the week. I'll also just show the Australia 200. And this has been positively screaming lately, and we are getting overbought in the RSI and a doji candle here on the Friday to wrap up the week. That suggests, and this is after a big bullish engulfing candle. So what does that mean? We've had some screaming rally here, but it may be starting to get a little bit tired. Could be a little bit vulnerable. Upside is probably about the 6,000 round number. Downside, first support 5,800, and let me just draw this in here. Here, and 23% retracement level 56.75, and this support in here is about 57.60. So there is room for a little bit of a pullback on the Australia 200, particularly if we get any kind of a disappointment out of China. If we get a good news out of China, then perhaps it could continue to carry on after digesting these gains a little bit. And I'll just wrap up with the Aussie 200, or sorry, the Aussie dollar. And we'll see here, it's still showing signs of base building. We do have a positive RSI divergence. It's pretty oversold overall. It had been knocked under 77, down to 76.15 and popped back. This looks like a classic bear trap washout reversal here, and we're seeing it start to creep higher. So initial resistance in around 78.80, then the 80-cent even round number resistance level. So that wraps up most of what I wanted to cover off this week. Even though it's a little bit slower week for scheduled news in terms of economic reports or in terms of big company corporate earnings, there's a lot going on behind the scenes, and there's a lot of action, and there's a lot of things that have to be digested. And because of this, we could still see volatility through a number of markets. We're still in a period of uncertainty and indecision that could drive quite a bit of trading action over the next week.